It's a tax season again. Let me start with a question. Do you know this? The number on your tax return this year doesn't just decide how much tax you owe. It can also decide something else. Whether you have to pay back the health insurance subsidies you received last year. A lot of people, they feel the same way. I didn't really make much more money. So why are they being asked to pay the subsidy back? First, we need to clean up one thing. Those insurance subsidies are not a benefit. I know that sounds strange to a lot of people because most of us think, isn't that money from the government? Isn't that a benefit? But in reality, a health insurance subsidy is more like an advance discount, not free money. When you apply for health insurance, the system asks you one question: how much do you expect to make this year? Based on that number, they calculate your monthly insurance premium and lower it upfront. Then time passes. The next year, tax season comes around. Your real income is finally clear. The system looks back and says, oh, so this is what you actually made. If that number is higher than what you estimated, the difference has to be settled. That's it. This is a moment when many people feel like they are being penalized. But let me see it in a different way. You are not being punished. You are just paying back the extra subsidy you received. At the beginning of the year, it's an estimate. At tax time, it's a final calculation. So then people always ask, why does it feel like I didn't really make more money, but I get charged back? The problem is usually here. The income you think you made is not the same as the income the system uses. The health insurance system looks at a number called modified adjusted gross income. It's not just your paycheck. It also includes things like investment dividends, interest, profits from selling stocks and funds, side income, or 1099 income. That's how you end up in this situation. Your life feels the same, but the number quietly across the line. At this point, you might be thinking, so is there any way to deal with this? That's a fair question. In my last video, I talked about using LLC properly to structure income. An LLC is not about saving taxes. It's about clearly separating income and expenses. If you are not sure whether you need an LLC or whether it fits your situation, you can check that video first. But here's the key idea you should remember. Like some people, they don't get a bill not because the system is unfair, but because their income is structured. If you only have W-2 income, it's simple. You make X, they count X. There's almost no flexibility. But if you are self-employed, running a real LLC, things are different. And this part is very important. In those cases, you are allowed to deduct real business expenses legally. It has to be real, reasonable, and explainable. For example, business-related office expenses, reasonable equipment or software, accounting or legal fees. These are not tricks. They are allowed under the rules. And the result? Your taxable income may go down a bit. Your maximum adjusted gross income also go down. And the subsidy settlement hurts less. But I have to say this clearly. None of this works unless you communicate properly with your accountant. Don't guess, don't copy someone else. Don't wait until it's too late. Let me end with this. Taxes don't just decide how much you own. They also decide whether last year's health insurance subsidy was just right or not. If you estimated low last year and now you see a bill, that's not surprising. What matters is not regret. It's preparation and clear communication with your accountant. Because most financial problems are not about making more or less money. They are about whether you planned ahead. I'm Jen. I will see you next time.